Hi, my name is Stuart Gethner. I am a coach and consultant for real estate investors. Here's my website, stuartgethner.com, my phone number, contact information. Today I want to talk about what a business model looks like for a fix and flip investor. Every business has a business model. CVS, Walgreens, Walmart, they'll buy Crest toothpaste for 80 cents, mark it up 25%, sell it for $1. They know exactly how many of those units, what variety, what product mix they need to sell each day so that they can pay the rent, the utilities, the payroll, and even the investors. And that's what you are. You are raising the capital, putting the business together, doing all those things to pay back yourself as you invest your time, effort, and money. So what is the business model for a real estate investor who wants to do fix and flips? What does it look like? So I'm going to draw my sales hopper up here. No fun making of my hopper. And I'm going to make an assumption that you have your marketing plan in order. You have segmented your market. You know how to make your phone ring. If you haven't done that yet, I welcome you to join our little video on marketing that you'll scroll and find, and we can cover it in that section. But here, we assume that you know how to make the phone ring, and your phone's ringing with sellers. Now notice, I didn't say motivated sellers, right? Because would you agree, not all sellers are motivated. But let me tell you, all you should be doing, that doesn't work, let's try this one. All you should be doing, there we go, is writing offers. That's what you should be doing, and looking for that gold nugget that comes out at the bottom, that one phone call that all investors love to hear, and the call goes like this: hello, hi, I'd like to sell my house. Really? Well, what kind of house is it? Well, it's a 3-bedroom, 2-bath, about 1,500 square feet, needs a little work. You know, unfortunately, my mom passed away and had some family members living there, and it wasn't really working out, so they've now left, and I think it's worth about $150, and I'd be willing to sell it to you for $100. And here's what the real estate investor hears. Hey, I'd like to sell you my house. Sure, tell me about the house. It's a 3-bedroom, 2-bath, about 1,500 square feet, blah, 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 blah. I think it's worth about $150. I'll sell it to you for $100. And that's where the fun starts, the evaluation piece of your model. So you think maybe if it's worth $150, you buy it for $100, you got a deal. When you do your research, you find out that it's really not worth $150. It's really worth $140, right? Like that's never happened where people overestimate their profit. And then we take the end in mind, as Stephen Covey would say. We start with our target, and if our end result is $140,000, right? And we're all the way back here at $100,000. Is this a good model for a fix and flip? Will this work for us? With every fix and flip, we start with an end in mind, and we come back over here, and we know we're going to have repair costs. And we divide those repair costs in two, okay? We talk about it for materials, and we also talk about labor. And I know what you're probably thinking. You're probably thinking, well, I'm going to do some of the labor myself, so I don't have to add a value in for that. And I got to tell you, man, you're wrong, because you have to build a business model where you work on your business and not in it, right? Where you can go on vacation and leave, and when you come back after a long weekend or 2-3 weeks or a month away, it's business as usual. And if you're too busy working in it and not on it, and are not creating that, I'm suggesting that you look at it a different way and look at building something that you can step away from. It's a great business model. And you have to account for the labor. Now, even every business owner, small business man or woman, when they start, they answer the phone, they take out the garbage, they raise the capital, they pay the bills, they evaluate the property, they do everything. That's how it starts, agreed. But we want to think about our opportunity for growth. We want to think big, right? So we're going to calculate for labor. And on your $140,000 house that we know is a 3-bedroom, 2-bath, right? How much possible work can you do if it's not fire damaged or water damaged? And so just generally speaking, I'm going to throw a number on the table, say 15 grand. Right? And I got to make an assumption that you know what a toilet costs, or you know what some of these fixtures are, or how much does it cost to floor or paint. Because if you don't know what it does and costs for this type of transaction, I want to beg you to partner with someone, because you'd rather split the profit than have to come out of pocket for the proceeds. And that's what happens to beginning investors. So if we have materials $15,000, let's say we have labor $5,000, so all our repair costs would be about $20,000, right? Not bad. And then what other expenses are we going to have as we start moving down this path? And here's one that most beginning investors forget about, or some of them don't even know. I'm going to call them holding costs, right? In fact, there are costs associated with just selling the property. Just because you list it for $140,000 doesn't mean you're going to get $140,000. But let's pretend you do. So we pay our commissions to our seller's agent 3%, buyer's agent 3%. We pay the full commissions, and I want to pay because I get a lot of deals from agents. And then you have title and escrow fees. So you figure 8%. 8% of $140,000, believe it or not, it's $11,200. It's a lot of money. And by the way, when you bought the property, you had some title and closing costs, right? Just to purchase, you had some fees. Let's say those are $2,500. There's going to be some other costs that you may not have thought about with our holding costs. We're going to call it utilities. I mean, are you going to be in fix and flip in Phoenix, Arizona in the summertime, or Chicago in the wintertime? Might you want the air conditioning or the heat on? Don't you want the water running? You need to have that place being maintained also. So whether you're pulling weeds or shoveling snow, there's going to be some maintenance and holding costs just associated with the property itself. And if you figure your fix and flip is going to take you about 3 months or 90 days, you have 3 months of those costs. So let's say they run you about $800 a month. So you got $2,400 just in those dollars alone, right? And then there's a cost of money. I don't know how you're going to pay for your $100,000. If you have the money sitting in the bank and you can write a check for the $100,000 and for the repair costs and such, then you got to calculate what that money could have been earning if it wasn't doing this. What would it be doing if it wasn't doing this? If you got a hard money loan, you put 20% down on $100,000 at 15% interest, your payments are $1,000 a month. So if you have 3 months, the cost of money is going to be about $3,000. These holding costs, they add up quick. Right here, we got $19,100. And you may go, oh, that's too high. And it might be. Let me round up, because I like easy math. And we could back off those numbers, and the idea really is to be conservative to start with. And the last thing that we got to talk about is your profit, right? You're not doing this for free, are you? This is taking 3 months of your time. So what do you want to make for 3 months of your time? I know you're a beginner. You certainly can't make $140,000 on a $140,000 home. But let's say you wanted to make 15 grand, 5 grand a month. That would work for you. Your first deal out of the box. If you made a few dollars less, you wouldn't argue. Made a few dollars more, you wouldn't complain. So here we got 20,000 plus another 20,000 makes 40, plus the 15 over here makes 55,000. These repair costs cost and holding costs and profit are $55,000. So $100,000 doesn't work. You're going to have to buy this property at $80,000 to $85,000 in order to realize those numbers. And if we're high on a little bit, you want to back off after doing some on-site inspection, fine. But out of the box, when we first looked at the deal, a lot of investors would think 100 to 140,000, wow, that's a big enough spread. So this is what a typical template of a business plan would look like for a fix and flipper. Part of your master plan, where you'll do this for a while, maybe you'll do this, and then you'll go into multifamily, buy and hold, but you have to have a master plan. So my gift to you for watching my video, sticking with me, is the free template for a real estate investing model. Whatever it is you want to do, whether it's fix and flip, wholesale, buy and hold, it fits all of those. Log on to my website, search for the free gift, which is the business model template, my gift to you. My name is Stuart Gethner. I want to thank you very much for listening and watching. Again, here's my contact information. If you think if I can be of service, I'd be honored. All right? Thanks again. Let's catch up soon. Take care. Bye for now.